Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, despite the challenges and uncertainties, the Australian dollar renewed bullish momentum has moved prices back to the level that was recently seen as a rejection point, which was at 67.35, whilst the US dollar, which measures the greenback strength against a basket of six major currencies, has weakened slightly from 102 down to 101.80 in the last 24 hours. As the market conditions continue to calm after the recent turmoil of the banking crisis, and now showing more strength, at least for now, turns our attention to the US economic indicators, which may provide further direction in terms of how the US dollar can it continue its weakness or not. And that will be the US Fed's preferred inflation gauge, that is the personal consumption expenditures price index. Following that, next week, the RBA, or the Reserve Bank of Australia, board meeting expects a 25 basis point rate hike, while others view a pause. With the RBA cash rate of 3.6%, most economists expect the central bank to deliver another 25 basis point or percentage point amid signs that the economy remains overheated. So there's still quite a bit of data to view before we can get too much to the point of excitement over the 67.35 level. However, with that all being said, if we do see a break, then that would give further pathway towards 67.90 as initial target. But like I mentioned before, we've seen good rejections from this area and no doubt may do so again. Looking at the euro, the market has taken further steps to the upside, but finding a bit of a struggle now above the 109 after printing a 109.25 high. As we can see, this was a rejection area, and no doubt there will be bears hovering anywhere from 109.45 to 90, and if so, could see a significant downturn. So I wouldn't get too bullish at this top side of the range in case we see something like we viewed back in January this year. And a rejection from the top side would give a significant move back towards the region of 108.45 and with the base holding at 107.35. Looking at dollar yen, well, the market took a step closer to that 134 objective after printing a high of 133.5. Still looking at the current pattern, I feel the market is still holding to a bullish case. And if we view both indicators marrying up, then we should see eventually reach its objective at 134.5 to 134.80 and any pullback to be shallow. Sterling still relatively firm, however, hitting the top side of 124.20, the market is finding a bit of resistance here, like previously when we look back in January and also in December. No doubt the market will be very much cautious at these current levels, as we might see some profit taking and maybe even see some kind of a pullback, which could see a fall to 122.80 and reassess from there. The gold, well, the market is finding a little bit more of an upstep into today's price action, but I feel towards 1,986 to 90 may find a little bit of a struggle, and even closer towards that 2,000 where we saw 3 rejections. I still feel with the technicals still remaining weak that the market still is unable to sustain renewed gains and still holds further risk for eventually to turn back to 1,958 to 1,935 as an objective. Wrapping up with oil, well, the market cheers as it reaches the 74 objective and now still has potential to take a further challenge, but there is a bit of divergence here. So the last leg up, that may actually see a move to somewhere around $76, then a rejection from there. We could actually see a pullback towards the 72 handle. So one step to the top side, that may see a rejection and then a pullback. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.